Today's featured guest on the Gold Nugget segment, Jim Rogers. Over the past 7 months, the stock and commodities market staged an impressive rebound from the credit crisis lows. What was behind this sharp rally? Well, many people think the government stimulus was at least partially responsible, but now that the Fed and European banks are tightening their belts, how will the markets react? Joining me today from Singapore with the answers is my featured guest, author and professor Jim Rogers. How's the weather in Singapore, Jim?
It's always the same. It's either raining or hot. We're on the equator, so.
Well, before we get to the markets, I was reviewing a map of your world tour at jimrogers.com. And, things have changed quite a bit in the past few years. I mean, if you and Parker were to retrace your steps today, would you have to take more precautions?
I look back in history, there have always been problems like that. Unfortunately, we've had wars since the beginning of time, and I presume we will have them until the end of time. We went through 15 war zones on this particular trip, and I suspect if we had gone, you pick the year, we would have had war zones or at least problems, civil unrest somewhere. So the world in which we live is not a world that I don't think has ever had peace all over the world. Try it again. Who knows if I would survive again, but I would be willing to try it. Once I did it on the motorcycle, I'd certainly be willing to do it on the motorcycle. And the second time when we did it in the special Mercedes, it held up better than we did. So sure.
You have an uncanny track record of identifying major market themes. In the 90s, you caught those emerging markets there, and next you switched to commodities, and you've added China's economic miracle into the mix. But, over the past month, you've made some bullish comments on gold and particularly silver. Are you becoming one of us, one of the few, the proud, the gold bugs?
Well, I've owned gold for some time. I don't think I'm a gold bug. All asset classes have their day. We're in a commodity bull market, and therefore gold is in a bull market. Gold is another commodity. Gold hit its low, I think, in 2001 and has been going up basically ever since. But, other commodities hit their low in 1999. They hit low before, and it's been a bull market. But am I a gold bug? No, I don't think gold is holy. I don't think gold is mystical, but I do own gold and have for a long time.
You've pointed out that the commodities bull markets tend to last about 18 to 20 years. You've cited that we're about 11 years into the current cycle.
Well, yes, I have spoken at conferences about commodities. We're sponsored by ETF companies.
You've also made some bullish comments on silver. A lot of folks are unaware that silver was incredibly highly priced several hundred years ago. That is until Columbus discovered the New World. It peaked at $806 an ounce when we adjust it for inflation. Even if prices approach their 1980s peak of $50, if we adjust for inflation, that's closer to $100. Do you think that silver could be the next dot-com bubble profit opportunity?
Well, in my view, all commodities are going to be in a bubble before it's over. I don't know, around 2020, we'll be talking and I'll say, please sell your commodities, and everybody will think I've lost my mind. They'll be shrieking at me that commodities always go up, they cannot go down, etc. Because like all bull markets, this one will end too someday. I do think that certainly silver is more attractive than many commodities. Silver is 70% below its all-time high. There's not many things in the world that you can say that about. And at the moment, if I had to buy a precious metal, I would probably buy silver rather than gold. Gold has been making all-time highs. Silver is far, far below its all-time high. Likewise, palladium. Palladium is another that's far below its high, but I think silver is probably more attractive now than gold. And, your point about silver, historically, and remember, silver has been used much more than gold as a monetary instrument throughout history. The U.S. was founded on a silver standard. And then, if you go back, Christ was sold for 30 pieces of silver. Throughout much of the world, silver was the monetary unit, more so than gold. Now, they've both been around, don't get me wrong. I'm not bad-mouthing gold by any stretch, but history is history.
Some of the questions I hear from listeners, wasn't that big run in silver from $4 up to $50 in 1980, wasn't a big component of that the Hunt brothers who had cornered the market? And I try to point out, well, you're right. Bunker Hunt isn't around today, but there is Barclays Silver ETF.
Wherever the demand is going to come from, in my view, you're going to have shortages of supply and higher demand for whatever reason. People can say, well, it was just Bunker Hunt, but remember, even then, it was a market of supply and demand, and if people had been dumping their silver, it never would have gotten to 50. Just wasn't enough silver at the moment. We're told he tried to corner the market. I think actually Bunker Hunt, he actually believed that silver should be that high and didn't know what he was doing. In the end, he wound up owning so much that it looked like he was trying to corner the market. But back to your main point, there's going to be demand from somewhere. There always has been, especially during inflationary times. And silver, as I said before, has a long history of being a monetary device or monetary instrument, and it will be again.
What they call the poor man's gold, but that's not really a derogatory term. It's just that it's what the everyday person can afford to own and use for currency.
Having driven around the world a couple of times, I promise you there's still plenty of parts of the world where silver is where people keep their family wealth and maintain, their financial stability.